Okay, I'm going to show you. See how this is like a holding level and then it broke. And then this looks to be free space, but this is the 15-minute chart. And if you go to the 5-minute, we see that, oh, it has broken the 15-minute pivot, the important high, but the 5-minute is still there. So in fact, on this same 5-minute bar, if this 5-minute bar is greater than the ATR, and this 15-minute bar is perhaps greater than the ATR, it's a very good sign to go short in this area. And then we can go to the 3 minutes to see that it is indeed a pretty good zone. And I would have my stop like right here. Now, did this end up working? This was the closing bar almost at Christmas time, so I don't think it did. If we look at, yeah, you can't really see if it worked or not, but that's definitely the trade. Look at that. Okay, so it did end up working. So this is after the hour. This is totally gonna work. See that? And then it came all the way up to here, the actual place I would want to short, and it did a whole 1-to-1 move. So let's just say my strategy is a 1-to-1 strategy. It did end up working. It ended up working. So all in all, we're looking at price being exhausted. So right here, see this? This is a holding level right here on the 15-minute, but it actually broke on the 15-minute bar. And once it broke on that 15-minute bar, we're looking for undercover. We're looking for undercover zones on the smaller time frames, and which is on the 3-minute especially. I don't know where this is. It's right here. Okay, so this would be my zone, and I see that the 15-minute broke, so it's probably going to enter pretty soon here. I'd give myself a little bit extra. Okay, and my 1-to-1 relationship would be here. So this would be my target, but if I see anything yeah, this is the zone it's targeting, so I'll leave it be. Okay, that's a 1-to-1. Now let's go to the 15-minute where we actually found this trade at. So we saw that, oh, boom. We saw that this is a bear fib, a second bar holding line here, holding line, and that this green bar was above average, and it broke the structure here. It broke this line, this important high, and it went all the way into this zone. Now, because this was at 1600 at like at night, I don't think it would reach all the way here, but if it did, that would accelerate our that would add to our confirmation that we should short here because it goes so far. Now on the 5-minute, this broke, and then this bar right here, the entry bar, technically speaking, is above average, above average candle body. Okay. And then, so it did not end up working all the way a 1-to-1. Worked 0.5. But yeah, I wouldn't do this exact example because it's the last bar of the day. I'm just saying the setup. Like this is 1600 on, Christmas Eve. That's probably not a good time to trade it. But before then, this was happening midday, and then this broke, and like it's heading straight to this 5-minute area, which equates to this 3-minute area right here. And then we'll take that trade right here, and we'll actually have a tighter stop. We'll probably stop right here. And then our risk reward is portrayed like this because we take 50-50 bets going this way. Yep, that would be our strategy of supply and demand, but it's not trading every supply and demand. It has to have a reason. So it has to break like the structure here. It has to break this line and come into a fresh undercover. I could say sniper zone, but no. It could have to come into an undercover zone, which is right on the 5-minute, which is also protecting more free space from the upside. So it's definitely a very good zone to take because it's hidden on the higher time frame. Not only that, it gets the breakout. So this 15-minute bar shows that it did not trouble at all in this holding area. By holding area, I mean right here. This should be a sell zone. This should be sellers, right? On the 5-minute, it shows a big strong pivot. It should be selling, but this 5-minute bar shows absolutely no respect towards it whatsoever. So that means the buyer or the sellers are actually sitting right here. And if they aren't, there is no sellers ever because this 5-minute bar is literally protecting a lot of free space as well. So it's a high probability that this 5-minute bar, if it were to reach inside of this zone, which I would have up here, just because I'm more strict, but generally speaking, if this 5-minute bar reaches into this zone, it is above average candle body length, which means it should not go any further. Like statistics say, it should not go any further. We would take a short, and we should see some retracement on that same bar, especially if it were to go all the way to my 3-minute zone. That's why I would take only the 3-minute one. I would only take right here. I would only take it right here, this whole area. This is the zone I would take. okay? But it'd have to enter in on this 5-minute bar. So this 5-minute bar has to go all the way under it. And so does the 15-minute bar. So this 15-minute has to get into there, and the 5-minute has to get into there. And that will let us profit from it. Because if it's a one-to-one relationship, I'd take that bet any day. First of all, it's above average candle body, so it shouldn't go any further, technically speaking. Secondly, it has already broken a zone here. It broke this with no respect towards it, so that means it has to show respect somewhere. Otherwise, it's just going to be a complete buying frenzy, which I'm fine with. I mean, it happens. So we get stopped out, it's fine. But more than likely, it's going to show something here. And we either take off half or we either do a one-to-one trade. I don't know yet. I think I want one-to-ones and just accept my losses. So there you have it. There you have it. Looks like that on the 15-minute.